What's going on, everyone? Welcome back to this Forex forecast. We're going to be covering some of the trades that we are in or interested in entering for this upcoming week, and that is March 1st through the 6th. Before we actually get into multi-time frame analysis on some of these pairs, I wanted to cover some of the trades that we did last week and the week prior, just to show you kind of what you should have seen or what you missed if you haven't taken these trades. So we're gonna start with USD Swiss Franc. You can see we have this M pattern formation, which is in the guise of a harmonics pattern. We were looking at longing because we were closing above this weekly support level. However, because of this M formation, we have a high probability of making it back to the neckline, and that's exactly what happened here before it fell back down to the support level. Next is going to be Euro USD. We had this descending trend line, this M formation, and with this M formation, once again, we have a high probability of making it to the neckline, and that's exactly what it did. And then we have Canadian dollar versus the Japanese yen. This was just based purely off of structure, being tested several times, closing below it, and we shorted it, went straight to target, as you can see here. And then lastly, New Zealand Swiss Franc. Nothing had happened yet, but this week is a possibility for us to be making an entrance on this pair. As you can see, we did end up closing just above this area of support. If you look back on the last trade, we can see that this was an area of interest for us to actually enter on the long, and we ended up closing above that area of support. So if our entry parameters are satisfied, we're looking at longing this pair, making it to the 38 of this impulse leg on the structure for this monthly time frame, and then it's also coinciding with this descending trend line. Now let's get straight into it. Before we actually go into these pairs, I'm going to need you guys to comment your ideas on the upcoming pairs that you want us to analyze, and also like this video down below. It helps others see this content as well. First on the chopping block is going to be the New Zealand dollar versus the Japanese yen, and this one is based more off of structure. So we have a monthly support that was closed above that support. So we have price closing above this monthly support on the weekly time frame. And if we go down to the daily, or sorry, weekly, we can see that this fib level corresponds, wrong one. This 50% fib level corresponds well with the structure. If we look left, we can see on the weekly time frame that we had resistance turn support coinciding with this 50% Fibonacci level. So once again, if our entry parameters are satisfied, we would be looking at logging this pair up to this 50% threshold before we actually consider another short. Because of this impulsive pattern to the downside, we're looking at a correction and then another impulse to the downside. As you can see here, we do have a descending trend line on the weekly time frame, so it's something for us to consider moving forward. Maybe another target if this was to be a channel. Once again, this is predicting, and we're very reactive to the market, but another area for us to short would be looking at taking profit down here, but that's days and weeks away from now. For now, we're going to be looking at entering long and then making it to this 50% threshold. Next is going to be oil. I'll just take you to the monthly. We do have a makeshift M pattern formation right here. So if you remember from the previous trades that we were just looking at, the M formation usually has a good probability of making it to the neckline, and that's what we're hoping for right here. In conjunction with that makeshift M pattern formation, we ended up closing above this monthly support level as well, and we're looking at entering a long right here. If our entry parameters are satisfied, you can see that we have our stop loss just below this level of structure. And the reason why we chose this target is, one, because of the M pattern formation, and two, there's a lot of structure telling us that this area is significant. We could see support area right here, and then it turned resistance right here as well. So that is why we're looking at this area as our first take profit. Once again, if our entry parameters are satisfied, as in we're making strides for higher highs and higher lows, then we would be looking at entering this trade at an optimal level and getting us a 1 to 3.8 risk to reward ratio on this one. And just real quick, I want to talk about this last one. This is going to be a 1 to 3.4 risk to reward ratio. And the last pair on the chopping block is going to be pound AUD. Real quick on oil. If we go down to the daily time frame, I forgot to mention this, we do have another pattern that had formed in conjunction with everything that occurred here, as in we closed above this monthly support level and this M pattern formation. Because of this ABCD pattern, we have another piece of evidence for us to go towards this neckline. All right, so the next pair on the chopping block, and it's going to be the last one, is going to be pound AUD. So we see this ascending trend line here. We have support once, twice, 3, 4 times, and then resistance 1, 2, 3, 4, 5. And then if we go down to the weekly, we can see that it came up, tested it once, and then came up and retested it again, closing below not only this trend line, but also this monthly structure level. So just like this trade down here, based off of structure, we're looking at shorting this pair to this area of resistance and support, previous support and resistance. So nothing real fancy here. We just have price closing below this trend line. We have price closing below this monthly structure. And once again, if our entry parameters are satisfied, which would be the third piece of evidence, third piece of confluence for us, we would be actually looking at entering this trade. But once again, we want to make sure that your risk is aligned. You are not leveraging more money than you're willing to lose, so that whenever you're trading, you're safe in the markets. That being said, this is the Forex forecast for this coming week. That's March 1st through the 6th. Be sure to check out the video next week where we're going to be doing the same thing, and Patrick is going to be doing a recap video of the winning and losing trades, what happened, why we ended up closing them manually, and then why they ended up going against us, if they ended up going against us. Talk together in the next video. Bye.
Creak in my neck, limp in my step, cramping in my muscles every time I try to flex. The broken,
what's up, guys?
not really in the right mindset to sing obey, obey. Never really been thought out like a politician bought out, but you made me listen to your petition on the route.